Okay, well, good afternoon, everyone. And once again, welcome to CoreConnect's KoreSummit webinar series 2021. My name is Oscar Joffrey. Today, we are going to have a great conversation following up. We're only 4 days away from the big day to March the 15th, where companies can raise up to 75 million under RegA, 5 million in the RegCF. So lots of excitement, lots to discuss. But today's discussion is one that it's even more exciting because it's the final step that we've been talking about, or waiting, I should say, for the last 3-4 years. It's something that's real. We're going to learn about it today, and then we have some great panelists that are going to share their insights into that. First of all, ladies first. Linda, please, if you could take a moment to introduce yourself to the crowd.
Good afternoon, everyone. My name is Linda Lerner. I'm an attorney and a partner in the law firm of Halloran, Farkas, and Kittela, and I focus much of my practice on the offering and trading of digital asset securities or security tokens or whatever you'd like to call them. And I am the chair of an American Bar Association committee devoted to looking at the issues that arise with digital asset securities.
Well, that's great. We finally got somebody that knows what they're doing. And Joel, your turn.
I'm Joel Steinmetz. I'm COO and one of the co-founders of Rialto Markets. Rialto is a broker-dealer and registered an ATS as well that specializes in private securities, both in traditional and digital form. And we are offering the capabilities of, as Oscar's saying, of finding ways to deal in the secondary markets for all those private securities.
And that is the topic of the day today: secondary market trading for RegA, RegD, and RegCF. And we put it there. And you're going to like this surprise. So the surprise is we are really going to talk about Rialto. This conversation will only be about how Rialto works, not in general. We made a decision without letting you know. Isn't that great?
Yeah.
We felt that we've gone through the education already, what ATSs are. It's important now to have them see every different ATS and what the impact is on the whole market, right? On that. But before we get started, let's unravel again. Just, you know, I'm the type of person that always goes by the person that's listening doesn't know what the secondary market and ATS. And in fact, I have a question for you, Linda. I often get confused between the two terms. I think I got it now. Which one comes first? I think I do. But I'd love to hear the legal opinion, or not opinion. What, the difference between ATS and secondary market, because they come interchangeably, and I want to make sure that people use them correctly, please.
Okay, so when securities are first offered to investors, that's called a primary offering. Then people own those securities and they'd like to sell them and buy the next good-looking thing. And that's called secondary trading. An alternative trading system, an ATS, is a venue on which this secondary trading can occur. An alternative trading system is a type of exchange. There are two kinds of exchanges: registered exchanges like the New York Stock Exchange or NASDAQ, and unregistered exchanges like Rialto, like any ATS. And there are different rules that apply to registered exchanges versus unregistered exchanges. So Rialto is an unregistered exchange, but it has its own set of rules, and it has some things that it's required to do by the Securities and Exchange Commission. That answer your question, Oscar?
Simple. Actually, I know it's going to sound funny, but sometimes the way people put them in words together, which one comes first, and now you're right. Because some people forget that, yes, it's secondary market, but where are you going to trade that second on an ATS? And what's an ATS? It's a registered entity within FINRA. I do know this part.
No, I need to correct you.
Okay, please.
An alternative trading system has to send a Form ATS to the SEC, but it is not registered. Like a crowdfunding portal is actually registered with FINRA. The funny thing about an ATS is it's not registered, it's just permitted to operate, but not because somebody says so. You send in the Form ATS and 20 days go by, and if they don't complain about anything that you put on your Form ATS, you're good to go. That's how it happens.
So it's a regulated entity, and
Yes,
it's not a registered entity.
good. Thank you,
Okay.
Joe. That was good.
So you mean I can become an ATS? I just joke. Okay, I wasn't. You know, it is funny. Everybody's, I'm going to run my own secondary market. I was jokingly about that, but thank you for that clarity. And I think it's important for, you know, we're going to need to do this again and again and again because there's such a large audience out there that hasn't heard of this, has never been exposed to it or been even allowed to participate in it. So it makes it very challenging for everyone around. So thank you for that first step, because it allows us then to go in. And as I said, this discussion is really going to be around Rialto, who Rialto Markets is. So I'm going to put it on you, Yoel, now. So walk us through what Rialto is. It's an ATS. Provide us the components to it that your oversight is through FINRA. Share that with us.
Can I just say one thing before Joel
Oh.
gets started? There are 40 some odd ATSs. Most of them trade exchange traded securities, and some of them trade government issued securities. What's unique about Rialto and a few other ATSs is that they are trading securities that have not been that are not registered and are not listed on an exchange. These are securities that were issued under an exemption from registration, except that when you get to RegA, the RegA securities are freely tradable. It's a kind of unique situation with RegA securities, but it's important to understand that very few of the ATSs are trading unregistered securities that were issued under one of these exemptions from full-blown registration. I'm sorry, Joel, but I just wanted to get that in there at the beginning.
No, that was a good point. And we did have one of those previously. And that's why I want people to start seeing what each one is like, what securities they can handle, because a lot of people have misconceptions. So please, Joel.
Yeah, so we'll focus for this session on Rialto as the ATS, the alternative trading system, and specifically how it deals within the secondary marketplace. And what Linda had said earlier about if you want to be an ATS, you file something with FINRA, and then you deal with 20 days and they come back. But what FINRA is really looking to do is to figure out whether this can operate as a successful exchange alternative. That's alternative trading system. And in order for it to operate as a successful exchange alternative, it needs several factors. The first, of course, is in essence a matching engine. What you want is to be able to have buyers and sellers come into the secondary market and meet each other, bid, offer, negotiate if you want, whatever it is, but for them to be able to match those trades. But that's not where the ATS ends. That's actually where it begins. That's the first step, if you will, is making sure that it's got the technology to assure those matches actually occur. Beyond that, there has to be the entirety of what is necessary to assure that a transfer of ownership actually happens. The match is not the transfer of ownership. An example I would use is if you go to a standard exchange, if you were trading IBM on the New York Stock Exchange and a buyer and seller met, that was not the transfer. There's what is termed there clearing and settlement. And until the trade settles, the ownership has not really transferred. Within the private market space and in an ATS, those rails to assure that the transfer of ownership, the discussions with the transfer agent, the discussions with the banks, to make sure that money has been transferred from the buyer to the seller and that securities have been transferred from the seller to the buyer are all component parts to assure that proper transfer of ownership of securities has occurred from start to finish. That's where the rubber meets the road. When you go to the regulators and you say, well, I'm filling out Form ATS, the regulators are going to spend a lot of time asking you all the questions of how the matching works, how the security works. And when I'm saying security, I mean cybersecurity, if you're doing it that way, how what they term maybe clearing and settlement works, maybe even how custody works. And I'll let Linda touch on that much more in more depth. But how all these component parts work so that the totality of the execution and the transfer of the ownership can actually occur. That's what an ATS does. That's what Rialto is doing.
I was just going to say, that is how Rialto does. And I just want to keep it to that because sometimes if you go, that's an ATS, people then take the assumption, oh, it works like this on that one. It doesn't. They have a different, everybody's got a different component to it. And that's a great overview. And we're going to get to the custody side. And like any ATS, and I hope I get this correctly, there are two sides to it. There's the seller and then there's the buyer. So what I want to do is split that into those parts. And then let's talk about the journey of the company. Linda touched on it. We have 3 regulations. They don't all treat the investor the same way, but we'll get to that part. So let's talk about the regulation first, and then we'll jump into the part with Joel. So Linda, I know you and I've had a conversation regarding, obviously the regulators fell short in a few things, but what we have today is what we have. So we touched on RegA. RegA is, if we could just touch on after the primary raise, the 3 different regulations and what can happen and not happen, and how an ATS like Rialto can assist those investors.
Well, there are restrictions on transfers of stock, depending on the exemption under which they were offered in the first place. So a Reg A stock is freely tradable once it's issued. And if it gets to having a certain value or gets more than 2,000 shareholders, it has to register and file reports with the SEC. But let's assume that hasn't happened yet. A Reg D stock, which is the traditional private placement, whether it was done by an offering memo or in a general solicitation on the internet, those securities have to be held for at least a year to prove that the original investor had investment intent. And you might have read about Kick and Telegram and how they got into a lot of regulatory difficulties. And what they were accused of doing was promoting a scheme whereby the original investors were immediately flipping out these tokens, and therefore they were being treated like securities, and there was no holding period. And the SEC goes on in its briefs about how bad that was. RegCF, which is the crowdfunding portal, has a completely different scheme. Accredited investors can flip their securities after 90 days. Unaccredited investors have to hold on to them for a year. So when the ATS is looking at transferring securities because somebody has put in a sell order, one of the many things it has to do is check with the transfer agent about whether the securities actually are free for transfer. There are other problems. A security issued under Reg D may have imposed by its issuer the issuer's own set of restrictions. The issuer may have a right of first refusal to buy the securities. There are all kinds of of restrictions that have been placed, especially by some of the big unicorn Silicon Valley issuers, because they want control over who owns their stock. So it's tricky, and it takes a sophisticated group of helpers for the ATS to ensure that the stock that is sought to be transferred, in fact, can be transferred. Does that answer your question? I think probably more than you asked for.
Oh, no. Listen, you know what? It's funny. Sometimes I get asked to teach a class, which I'm not a scholar in any way, please. But I do get asked to teach a class about certain things, about raising capital. And professors go, can you just go over the high level stuff and sugarcoat it? And I go, so when do you think they're going to want to learn the real stuff? Like raising capital, you got to go through due diligence. Yeah, but that's the boring stuff. No, that's the stuff that's actually going to get them to the finish line.
That's the investor protection stuff.
Yeah. So no, I think that was well said. I mean, look, there are 3 different regulations. I'm coming to you, Joel, with it. 3 different regulations, which that's one of the things that makes Rialto, I'm going to call it unique. You have been granted, I hope I say correctly, the ability to allow investors, individual investors, to trade their RegD, RegCF, and RegA. But to Linda's point, there is with one regulation, it's pretty safe. With the others, you obviously need to do a lot of work before you can even proceed. So if you can touch on that, yeah. But the more important part, I think, is just to let everybody know who Rialto can represent and to what grade, right?
Yeah, and yeah, that's a key component to it. So it doesn't matter what kind of investor you are. We are going to put you through the standard anti-money laundering and know your customer procedures as a broker dealer to make sure that you're a viable candidate to be able to invest in these securities. But once you've registered and gone through that procedure, you can be accredited, you can be non-accredited, you can be a retail investor, you can be an institutional investor. All of those have the capability. The key component of it is what happens on the back end, so to speak, and that's what Linda was describing. The fact that you want to come in and buy, we have to go back to the transfer agent and make sure that the transfer agent is okay with allowing these securities to be transferred, because there are restrictions depending on whether you're a RegA customer, or RegA security, RegD or RegCF, and within those, what type of investor you are. So all of those things need to be checked in an automated fashion before facilitating any of the transactions. What Rialto does is Rialto goes into those transfer agents and the banks on the other side as well to make sure that the securities are free and tradable and that the money is available as well on the banking side. And once that's secured, we can then lock that up, so to speak, and assure that the trade actually will happen. Ultimately, when that transaction happens, then we can go to make sure funds are transferred, securities are transferred. Now, go ahead, Linda.
No, I was just going to say, don't forget about vetting the issuers as well. That's a key component.
Absolutely. And there are 2 more points that I want to touch on, and Linda, that's a good segue. Thank you. The vetting process, or the onboarding process, as we call it, to make sure issuers are legitimate companies and investors are also file and pass through the AML KYC requirements. Those are processes that we have them in-house, et cetera. But to Linda's point, in order to be successful at this, we need to get people who really understand what this market is all about. Just walking into it and saying, hey, RegA is really a hot place right now. It's going up to 75 million next week. Everything's great. I'm in, is really going to be wrought with tremendous difficulties. You need to have the right attorneys to make sure that they can walk you through and navigate the waters necessary. You need to have transfer agents who actually understand what has to be done and assure that each of those requirements, the ones Linda pointed out, are adhered to. there are lots of different component parts to make sure all of that works. And remember, this is a very different type of investment world than Microsoft and Intel are trading in. It used to be, when those companies first came out, the stock market, New York Stock Exchange, NASDAQ, were investment markets, not trading markets. People went there to invest. Now those are trading markets. High frequency traders dominate the volume that's there. Things are traded in pennies and back and forth. These markets, the private securities markets, are investment markets. They're looking for investors, proper investors. We're making sure that all of those rules and regulations that protect investors of all kinds, retail, institutional, everything in between, of all kinds, are assured by making sure that there's legal oversight, compliance oversight, transfer agent oversight, banking oversight. All of that is done within the Rialto system.
It's complicated, is the point.
Yeah.
You might think, oh, this is easy. I can do this, right? It's complicated. Working out the relationship between the ATS, the transfer agent, and the bank so that everything moves in sync, so that you don't have money flowing without the securities going, and vice versa, takes a lot of work. It's doable, but it takes a lot of work.
And a lot of guidance.
One thing that I want to make sure it's really clear to this audience, because as I said, there's a lot of talk on ATSs, and as Linda alluded to, there's over 40, and I'm sure there's probably even more than that applying every day, getting licenses. It's a distinction that Rialto has in the marketplace. So I've gone through another ATS where it described itself. Yes, it goes through retail, but in order for the retail investor to go through this particular ATS, it needs to go through a broker dealer. This is something very different, distinctively different for Rialto. Am I correct in that? Yeah.
Yes. So Rialto is different in what we've achieved or what we've gotten, and we've gotten. The words, I'm choosing my words carefully. I'm sure Linda will correct me, and my compliance officer, who always corrects me when I do this wrong, is unfortunately not on a call. But basically, what Rialto is recognized by the SEC and FINRA to operate an alternative trading system, an ATS, for private securities in both traditional and digital form. That's unique. Dealing in the digital form and private securities, especially in the digital form, is unique. The SEC, FINRA, the regulators in general are working very hard. They really are working very hard at trying to understand digital securities and the digital marketplace in general. And we've spent years, Linda spent even more than that. I think she spent, eons, trying to educate regulators, and the regulators have been remarkably engaged in getting educated and getting up to speed. But there are bridging the gap between what traditional markets have and what traditional markets are is challenging. And so by being able to do this in the private securities market in digital and traditional form and focused on private securities, is something unique, and it took a lot of work and innovation in order to assure that the boxes that need to be checked by regulators are actually checked.
It truly was very complicated. The initial resistance was from the SEC was that they wanted to make sure that the money and securities flowed simultaneously, more or less. Because they were afraid, the regulators were afraid that money would go whoosh in the night.
That's the technical term.
The technical term that the SEC uses to describe that. And so I developed a non-custodial solution, which took about 2 years till we worked out with the regulators what that would mean and what it would mean for a broker-dealer to do certain things, but not exercise control over client funds or securities, because that's what the SEC was having so much trouble with. And it continues to this day to have trouble with it. No one's really proven yet to the SEC that they can successfully custody and control digital assets. The SEC has opened the door recently and said, yeah, come prove it to us. But that's kind of what they've been saying for a couple of years. So this non-custodial solution was developed where the bank's controlling the money, the transfer agent is controlling uncertificated securities. There is no equivalent of clearance and settlement like there is in the normal securities world. Clearance and settlement just doesn't happen that way, whether the securities are digital or they're not. You have a bank doing one thing and a transfer agent doing the rest of it. And the ATS merely serving as the matching engine. This was almost excruciating to work out, but we got there.
And I think that's, I just want to go on that point as well. One of the things one of the approaches we took at Rialto was not just looking at standard terms that are used in the marketplace and saying, how do we do those? But rather the results that were required in the marketplace and how do we get there? So clearance and settlement is actually a term. Ultimately, there's a result that clearance and settlement facilitates. What we've done, working with Linda on this, what we've done is figure out a way to accomplish the goal without necessarily going through the standard terms and standard procedures, but we've accomplished the goal. We've done that at Rialto, actually, in the trading system as well on certain things. And that's the approach we take. We look at it and say, what's the goal? What do we want to end up with, both from a regulatory perspective, from a business perspective as well? What do we want to the end game to be? And then how do we get there? And if we have to get there in an innovative way, let's see if we can get there in an innovative way that still stays clearly, squarely within the regulatory framework that's necessary.
Okay, so I'll sum it up in simple words because I love simple words. So at the end of the day, Rialto is able to onboard individual investors. Obviously, there's a whole structure you've created for it to allow them to go directly to Rialto. You'll still have to go through a KYC determination, all that, granted, but the investor is coming to you. This is a clear distinction that I just, because right now that is the differentiator, and you may not. The other process investors need to go through is they need to go through an intermediary. They must go through another broker dealer. So I think you need to more emphasize that more.
That
because
is
it's sort of like if you were the only blockchain company, we're blockchain. What are you?
Right.
That's
correct. You come directly to us no matter what kind of investor you are, and we take care of all the things for you. That whole complexity that we were just describing, you go to, let's say, an issuer's website, you come directly to Rialto's website in our system, and you hit a button that says trade now, or I want to trade, or whatever the button says, and then it launches you into just putting in your order. You have control of that. You see what's going on. You can follow the markets. You can see the bids and offers that might come in. You see all of that, and you can make your own decisions. All the complexities that we just described are taken care of under the hood, behind the scenes.
Exactly. You bet. It's the secret sauce that made you who you are. But at the end of the day, for the market, for them, what they want to know is, who do I need to go to? Now, you still do work with broker dealers. This is not to say you don't. but it does allow the issuer to come directly. So let's talk a little bit about how you would work with the broker-dealer community on that. And obviously I'll go to you, Linda, as well, because you're representing both sides. How does that ultimately, it's to bring a better relationship both with the secondary market and the broker-dealer. Joel, will get you started first.
I'll start on that and really cover the business side of it. As far as the broker dealers coming to us with a group of customers, that's just like any customer coming. That's not a problem at all. We've worked when we've built. Our management team this is now our 9th ATS that we've built and managed. So we're quite familiar with dealing with every kind of investor you can think of, actually in just about every asset class you can think of, whether it's equities, options, futures, fixed income, FX. We've dealt with all of them, and we've built ATSs for all of them. Having a broker dealer coming to us and having their end users as the customer, as far as we're concerned, the broker dealer comes to us, and that's the broker dealer customer that we have. Broker dealers have their own set of rules, and they have to deal with their customers with those rules. So now it's, in essence, 2 sets of rules that have to be implemented. One is between Rialto and the broker dealer customer, and the other is with the broker dealer customer and their end user customers, whoever those are. We will coordinate very much with the broker dealers. Very often we'll share a lot of the AML and KYC, the anti-money laundering information we get to make sure we're comfortable with it. But the customers that come to us in any form can come to us in whatever form they are. We will implement the required compliance and regulatory regime for that particular user.
Perfect.
I think the point is to make it seamless and as non-duplicative as possible.
She cut out again.
Yeah, I'm going to move, actually.
No, it's okay. It's okay. It's okay.
I'm going closer to my router so that I don't have unstable internet.
So one of the things while Linda's moving, the idea is exactly that, not to be duplicative. Rialto is built to scale. We've done 2 things in mind when we built the system. Number 1 is for it to be institutional strength, and number 2 is to be retail scale. Institutional strength requires a whole lot of operational and integration capabilities in order for an institution to feel comfortable coming directly onto Rialto and knowing that we're integrated with order management systems and EMSs and all different kinds of risk management systems, and all those things are available. But in addition, we're able to deal with scale so that if we need to onboard hundreds of thousands of users, we can do that in scale. So it's institutional strength and retail scale to assure that that can happen. And to Linda's point, we don't want it to be duplicative. Therefore, if we have a broker dealer coming on, we want to make sure that the onboarding procedure doesn't duplicate necessarily the onboarding procedure of all their underlying customers.
Perfect. So, yeah, are you back on?
Yes.
Oh, good. Okay, excellent. So
my computer likes being next to my router better than it likes me being in the living room. I went there because the sun flows in, and
well, pretty soon you'll have satellite and you'll be moving your computer around like this all over the house. Oh, there it is. No, it's important for everyone out there, those who have ATS licenses, they're trying to hash them out. These models are very important. It'll be interesting to see how it plays out, given that on the primary, we're giving the power to the investor, like in RegCF and RegA in particular, with the investors making their own decision. Nobody's telling them what to do. And I see it as a journey for them, right? They buy a security on their own, whether it's $100, $500, $1,000, whatever the amount that they spent. And that journey should continue I have nothing against platforms or ATSs that operate with the intermediary in part of it, but this is very unique in the sense that the investor can come directly. So we know now the investor, and now let's talk about the issuer part of the onboarding process, because there's some issues here that are starting to arise, that people are getting really bad advice. I mean, they're getting advice that, hey, I don't need to worry about blue sky. There's no ATS out there. So yeah, build an intranet and trade. So I'm going to come to you on this one, Linda, because this is one that's really dear to us. Sherry and I have been having a lot of discussions around this, and that people at North Capital and a few others, that we're all greatly concerned about this. What is, people have created that, do I need blue sky in order and do I need to register in the securities manual, and what's the implication if I don't?
Blue sky is a muddle, as the Brits would say. You have 54 jurisdictions. I mean, there are states and then there are territories and there's DC, and everybody's got their own set of rules. And for instance, let's look at regulation crowdfunding, RegCF. So that regulation preempted the states from being able to interfere with the offering. But what they forgot when they wrote RegCF and all of that flurry of activity around the Jobs Act was to provide for the secondary trading. So while the initial offering is exempt, you still have to make sure that you have, remember, these are unregistered securities. If they were registered securities, you could trade them in every state, but they're not. They're unregistered securities. So each state has its own rules about what you have to do in that state to avoid registration. And fortunately, there is one exemption that covers a lot of states, and it's got to do with whether there's a let's call it a review book. It happens to be run by Moody's, the one that used mostly. And that provides that many states accept that, but then some states sort of accept it only partly. And then you have all the rest of the states. And so if you only do a couple of transactions in that state during an entire year, maybe you're okay. And it's a mess. It really is a mess. And that's a difficulty for everyone. RegD is really the same. It's RegD, the states were preempted from getting involved with the offering, but that doesn't mean that they're preempted from getting involved in the secondary trading. RegA, you're okay because it's freely tradable stock. It's as if it were registered. So you need very skillful vendors to help you in sorting through not only why you can trade this under federal securities law, but how you can do the trade under state law.
Can I jump in, Linda, and just...
Oh, please do.
I'm actually not, I'm going to just go back to you. I'm asking a question. If you can also describe the difference or the need for blue sky, not only in the secondary markets, but the difference between RegA, RegD, RegCF in the primary markets. What are the blue sky requirements there?
It's complicated. RegA is split into two parts. It's called RegA Plus, actually. And there are different financial levels for the two parts. It's called Tier 1 and Tier 2. And the states have more authority over the smaller offerings than they do over the larger offerings. I'm trying to keep this simple. RegD on the offering, you have total preemption. That's under an old act called NISMIA, which dates back to the 1990s. And that really helped a lot with the offerings. RegCF, as I said earlier, on the primary offerings, the states are preempted from interfering. The states, for their part, would, if they were on this panel, say, listen, we're here to protect investors. So we don't want people just coming into our states and selling junk to our investors. And some states have taken a very strong stand. There is a state, which I won't identify, which has a lot of concerns about issuers that have anything to do with blockchain. They think it's dangerous for investors. That state thinks it's dangerous for investors. In the old days, we called this merit review, right? The states would make up their mind about what they like and what they didn't like. And this kind of security is never going to trade in my state, would be the attitude of some securities commissioners, and still is. And it's very difficult to get the states to give up on investor protection. If you mention the word preemption, they bristle, and I understand that. But when you get to having to worry about different rules in every single jurisdiction, it becomes almost impossible. And we all have to remember what this is about. This is about helping the American economy and helping American businesses raise the capital they need. It's an inducement for these businesses to be able to say to potential investors, and you can trade this on the secondary market. So the mess that's been created by the welter of blue sky rules, I understand the motivation about investor protection, but we're in the middle of a pandemic and we have businesses closing left and right. And we especially have huge numbers of businesses, and much greater proportion, owned by Black and brown entrepreneurs that have closed. The Federal Reserve Bank did a very interesting study about this and said that the differential for Black-owned businesses closing during the pandemic was 40%. That's a lot. That's really a lot. So I think that if we're going to recover, as everyone wants us to do, then we've got to think about how we can help, still protecting investors, but how can we help people raise capital? It's critical if our economy is really going to come roaring back. It's not enough that Wall Street came roaring back. These businesses have to get back into business. And they don't have the capital, and the banks are reluctant to loan it to them. I was very glad to read the other day that banks are embarking on a much more, smaller banks are embarking and were given federal money to embark on a much more aggressive lending program. But raising capital in traditional ways is something we need to think hard about, how we're going to encourage that in a better way without losing investor protection.
I guess my comment to this or question is that even understandably that the regulators could always done enough. I mean, I believe Rialto, you partner with a law firm who provides a booklet or the requirement in order to make this thing happen. It's an additional cost. Obviously none of us would want that, but that's the reality. There is a pathway to bring the company to the secondary market, ATS at Rialto, and a trade check being the report that it covers all 50 states. It covers blue sky. So with that, then the company can do it. But if a company doesn't, that's where the dangers come in, correct? That's really where the dangers are coming in. People who are playing Russian roulette with that. I mean, I've had clients say, my lawyer told me I don't need to do this. And I go, well, you need a lawyer who knows what they're talking about, right? So the other thing is nobody knew about these trade check reports, right? I mean, that's the other thing we're unraveling the industry. Thank goodness for this report that came out, because up until then, it actually was nobody heard of it 3 years ago. Nobody. So it would have been as difficult as you pointed out right now, Linda. I mean, as an entrepreneur, at least now I know, okay, I'm going to do a RegA. I want to offer secondary. I want to plan for that. The law firm I can get now the trade check that will include all my requirements. I've met all my requirements in all 50 states. Whew, I don't need to worry about it. There's paperwork to be done. Don't get, that that still needs to get done. But the point is, it can be done. And regrettably, part of it is manual and part of it is not. But did I nail it there for you, Joel? I mean, that is the.
So yeah, I think that's it's a key position when you're looking as an issuer, and it's hard to raise capital. It's hard. It's hard to get people to write those checks. It's hard to move money. It's hard to sell your company. There are a lot of difficult things to make sure that you can raise capital. To have to worry about how is this going to be, I'm going to be able to do all the trade check stuff. How am I going to make sure that the attorneys are correct and I got all the paperwork necessary and go through my blue sky requirements and get secondary trading and make sure things can settle properly and all those bits and pieces. If you have to worry about that, you've taken your eye off the ball, which is raising capital and running your business. And what we started with is saying 2 points. Number one, we don't try to do it all. At Rialto, we don't try to do it all. We are a secondary market in that ATS. We are a broker dealer. We are a secondary market. We look for help and guidance from all the other people and all the other component parts within that area. That's point number one. Point number two, when it comes to these types of, I'm going to give an example. Just because you're an ATS doesn't mean you can do what to do in private securities. Just because you're an accountant doesn't mean you know what to do for a doctor's transactions. Just because you're a lawyer doesn't mean you know all the rules and regulations about private securities. All of those pieces, just because you're a transfer agent doesn't mean you know how to deal with RegA and RegD securities and all the requirements there. If you're an issuer, do your homework and make sure that you've gone to people who know what they're doing and can guide you to others who know what they're doing. Because this process, if you blow it, if you make a mistake somewhere, there is pain that will come your way. And that's the thing we want to avoid. As Linda said before, that investor protection is paramount. How do we make sure that that is protected? Because if it's not, regulators are going to come down.
Yeah, it's a good point. At the top of this, it's all about investor protection. And one of the things that I like to look at it, I'm glad to have people like David Weil, Linda, and many others who have the strength and drive to try to get regulators to make a change. I know it's not easy. I get that. I look at it this way. I'm more practical. I have to live the world today. I could sit back and say, it's never going to work, or we find a way to solve that problem. And today, I think we've come to a way where we're going to be able to allow a person to trade $100. I mean, if that isn't patting ourselves in the back, I'm not suggesting the regulators couldn't do more to make it better. 100%. By doing that, all they're going to do is reduce the cost, that's the important thing. Would you agree with that, Joel? I mean, it's just cost reduction at that point.
Yes, and I'm going to go even further. We've come so far. We deal with issuers that you can invest $10. That's how far we've come, is you can invest $10. In order to get to that point where you can invest $10, you need scale and cost efficiency. You have to drive the costs down significantly that it's worth it. And you need to have scale because, let's be honest, if you're trying to raise $2 million in $10 lots, that's a lot of people. So you're not going to be able to do that so easily. Those two component parts are where we've gotten to. we should be patting ourselves on the back. That's a long way from where it used to be.
Yeah, we had
Yeah.
to educate regulators, transfer agents, banks. We had to get everybody on the same page about how to do this. The IT folks had to make this all happen seamlessly.
Yeah,
Well, not
we've overlooked them, and we shouldn't have in this
yeah,
session.
well, and that's what I was alluding to there. That's exactly what I'm saying. I look, I'm 11 years in, and I'm sure, Linda, you, David, and others, you guys are counting in decades. I'm counting my first decade plus one. But today I did a webinar for 11 years. But yeah, I still got the same excitement as I did then. I knew technology could remove a lot of the hurdles if we could get everybody who understands how to fix the problem. The issue that I see right now with the secondary market and ATS is not so much that we haven't done that. We have, in fact, it's blown so much out of the water that people think it's so easy, just go there, ready to go. This is enlightening to them. Okay, there are some steps you got to take. But the real issue now is what's happening behind the scenes will never be seen by the individual investor. And that's the way it should be. In fact, I mean, think of it this way. Today, I describe the private markets. If we really want what everybody desires, is that one day, you go in here and you go KORE and you get KoreConnects as a private company using an app. Just the same way that when you put in Tesla, you get everything from Tesla regard. We're not there yet, but what is happening, these are the pipes. People don't realize that's that infrastructure to make data more fluid. Once data becomes fluid, we can transact, as you pointed out, Joel, $10. Holy macro. I mean, all we ever hear about secondary market is $250,000 trades, $1 million trades, one investor. Here, it's different, right? And everybody wins, even though, and that's where we have you, Linda, thank for, and David, and others, that you will keep fighting the regulators to demonstrate to them that we need to change things to make it more efficient, to remove these additional hurdles, and understanding that because the infrastructure is already there, we're already equipped to handle it in either way. That's what's exciting to me, because this only makes it easier for regulators to say, you know what, it is working. We don't need to do that any further. We have a way of managing and reviewing this and having a deep dive. I'd be curious to hear your thoughts on that, Linda.
Well, what I was thinking about as you were talking is, although the pandemic has been horrible for so many, I think that one good thing that can come out of it is that it can provide an impetus towards our really focusing on how can we make the capital raising process much more efficient. If we're going, I said this earlier, if we're going to help businesses survive and recover, then they have to have access to capital, and we're supposed to be helping them. So you can't get so hung up on investor protection that you can't look at innovation and innovative ways to safeguard the investor while allowing this capital raising to go on. And I'm very much about community investing. I think that when businesses are local and local people who know the entrepreneur or the business or who depend on the business can invest in it, that's one of the best things we can do for the economic recovery of this country. I know it sounds a little bit flag waving, but I think it's so critical right now.
Actually, the way David always reminds me, Oscar, he says, the key to economic growth in the United States is the small business. Growth has always been in the small business. And the fact that investors are investing in these small businesses, that's how we get ourselves out of debt. And people really need to understand this. It took me a while. Look, I'm 11 years in and I still listen to his words and I follow it because as an entrepreneur, I always felt like, oh my God, I'm raising capital. There's no money out there. Until I met David, I was always under the impression that money wasn't there. Then he told me, Oscar, there's $36 trillion sitting there every day. It's just sitting there waiting. I'm going, huh, isn't that interesting? So I understand that now, and I have a lot of respect for what everybody goes through. The broker dealers, we have great broker dealers in our ecosystem, like Rialto and Toro, Delmore, Andes, and many others. And I know the excruciating work that they do in order to bring companies their success, and understanding that that capital exists out there. I believe ATS secondary market is going to open that up. It's going to make their jobs easier, because the investor is going to look at the security and say, you know, I may have to, not that I'm planning to. I think this is the other thing I've learned about secondary markets, is that it's not about liquidity as it is so much about, if the investor needs to monetize their investment, they have a venue now to off-ramp, and they can do it as the same way they invested. I think that is a phenomenal story, right?
The other part of the story, Oscar, is that the investment may be worth more, and the investor may wish to assist another business that the investor learns about. You know, go on to the next local entrepreneur. I keep emphasizing that the majority of new businesses are minority and women-owned businesses. That's who's opening up businesses, and getting them hooked up with capital is just so important. I feel like I'm sounding like a broken record, but
don't.
But it's true. We need to help the capital markets and capital formation, and that's what we're trying to do. And it's not just because of the times; it's because in private securities and private markets, it has always been a little more difficult to do that in private markets. And the private markets are what's the real growing market, much more than the public ones. Secondary marketplaces help investors feel comfortable not only getting on the on-ramp, but having an off-ramp. When you invest your money and you have no idea how you're ever going to get it back, except you wait 27 years for an IPO, that's painful. But if you have an off-ramp, or at least a vision of an off-ramp at some time in the near future, you are much more apt to put that initial investment, and that will help change the capital markets, or I shouldn't say change, enhance the capital markets going forward.
exactly.
I like that. That's the key word. We've added another attribute to the private markets we did not have before. It's an enhancement. It's an extra feature that a company has, a broker dealer has, when it's presenting an opportunity. And this way, the investor can, because I'm sure a lot of them think, yeah, I heard my buddy put in $5,000 in a company, had to wait like 40 years. Not going to happen with me, right? This is, I think it's exciting. We're just starting. And the key element that I wanted to get out today, we got derailed a little bit, but that's okay. You know, that's the exciting thing about these webinars. I learned so much in different ways, and it's meant to be that way. I'm a very different, I wasn't meant to be the host of these events. I forgot to tell everyone. It's just that our partner got really busy. He grew up really fast with his team, and they're all over the world now. And I had to take on the role of becoming a host. And so I said to myself, how can I do that? And I did it based on all the questions our clients ask me all the time. And it's funny, there's a lot of ATS questions I cannot answer, but I have a really good framework now. When people ask me between one or the other, I can walk them through, not to say, oh, they're not good at it. No. It's a good ATS. This is how they do it. This is how they do it. You need to decide what's best for you and your shareholders, how you want to approach that. And as well, that's one part. And then, can they handle the regulation you raised the money in? It's number two. And then three, this is the one that I get them on. What kind of investor base do you have? Are they individuals or are they institutional? Because if it's individuals, it changes the playground completely, right? So we're finally to that point. Like, you have to understand, to me, that's a great thing. That's a great thing, because 4 years ago, 3-4 years ago, We had panels of secondary market guys. Oh yeah, you'll be able to trade this. You'll be able to trade that. Yeah, you bet. You'll be able to trade everything. And nothing ever happened. And nobody ever wondered why it didn't happen. I know Linda was laughing in the audience saying, oh, these guys don't have a clue. But it's true. They were in the audiences, and a few of my clients got caught up in that. They signed listing agreements with these secondary markets, and then a year would go by and they can't list. And it was rather interesting, because as they were learning what kind of ATS they were describing themselves as the all for everyone, rather than this is our niche. So this is part of that education part, and we're going to have another one again. I really would like to have one.
Can I just say one last thing?
Yes, of course.
I just want to say publicly how proud I am of Joel and Shari and everyone at Rialto. They have been, I work with Rialto, as the audience might have guessed. They have been so nimble in their thinking. You really have to be creative when you put this together. So persistent and so diligent about getting everything to work properly so that everyone is protected. It's really been wonderful, and I'm so proud of all of you.
Thank you very much on behalf of all of us. We appreciate it.
Wow, look at that. I didn't expect that one coming. Bravo.
That's the real surprise, Oscar. That was really
that was the real surprise. Okay. A great endorsement like that from Linda Lerner. That's fantastic. As always, look, I'd love to give each of you a minute. Give me your closing remarks on secondary market ATS. Joel, I'll start with you, and then Linda.
Yeah, so I'll just say two points. The first one is it is an essential element for capital formation. It's not just about raising money, it's finding a way to have your investors be able to monetize. And secondary markets are essential to that. Having a robust secondary market that can fulfill the requirements necessary in private securities is extremely complicated and complex. We suggest that if you're getting involved, make sure you deal with someone who not only knows what they're doing from the ATS perspective, but associates themselves and teams up with the proper support systems, like the right attorneys, like the right transfer agents, like the right banks, etc., in order to make sure that it's a clean and smooth system.
Linda.
Joel, I don't know what I could possibly add to that, except that I think that the future for secondary trading of private placement securities is huge. And I think that the regulators are getting used to it and getting less nervous about it. And again, I would say exactly what you said, Joel. If anybody's thinking about entering into this line of business, please get the kind of help you need. It will make your life much easier.
Perfect. As always relying on the professionals. And I want to thank both of you this afternoon for coming down. And for everyone else, like I said, we're 4 days away. If you haven't registered yet, on 15th of March, we have a great webinar, The State of the Jobs Act 2021, with the father of the Jobs Act, David Wield, and Sarah Hanks, and host and moderator, Vincent Molinari. It's going to be a great kickoff to a phenomenal week. Thank you, Linda, Joel. I'm hoping we'll see each other again soon. Take care. Have a great afternoon.
Weekend.